Thank you very much for staying. Welcome back to Marketplace. Now, government's quest to conclude the IMF program possibly by April 2019 could face further challenges. That's the conclusion one may draw after government set a budget deficit higher than what the IMF program has projected. George Rafi tells us more.
According to Ghana's program with the IMF, government should end 2018 with a projected budget deficit of 3.8%. However, government is now looking at a deficit of 4.5% for next year, higher than what the IMF program has projected. The budget deficit is basically described as the amount of money spent in relation to revenue mobilized. So, for instance, government is hoping to spend some 61 billion Ghana cedis for next year against a projected revenue target of 51 billion Ghana cedis. This will result in a budget deficit of about 11 billion Ghana cedis. This is what has been expressed in percentage terms as 4.5% for next year. For some, the budget deficit for next year has raised a lot of concerns about whether government can indeed end the program by the first quarter of 2019. This is because sources say government and the IMF have all agreed that December 31, 2018 should be the test date for assessing government performance before it can indeed say Ghana has concluded the IMF program. But for Professor Peter Korte, the IMF should revise its notes because it is not possible to have such drastic cuts in budget deficit in just 2 years.
From such a high deficit of 11% within a short space of time to 3.8, I think is unrealistic. Bear in mind that if you overcut expenditure, you are hurting jobs, you are hurting the economy, you are not stimulating growth. So you need to strike a balance between cutting expenditure and also stimulating growth and creating the needed jobs. From such a high deficit of 11% within a short space of time to 3.8, I think is unrealistic. Bear in mind that if you overcut expenditure, you are hurting jobs, you are hurting the economy, you are not stimulating growth. So you need to strike a balance between cutting expenditure and also stimulating growth and creating the needed jobs.
Former Deputy Minister of Finance Kokure Hagen says the development might not be good for the economy.
If you become over-ambitious and over-promise, which leads to a high government expenditure, yet you are cutting the very revenue that will give you the cash to fund the programs, then you are creating what is known as the public sector, the public sector borrowing, requirement and all that, as they have in England. And that is exactly what we are talking about. That is the deficit that you're doing, because you have to go and fund that thing. So we have to, if we want to pursue, a program where we do a lot of things on increasing expenditure, then we have to be also doing things that will help us to increase our revenue.
So why is the completion date such a big deal? Well, for some, maybe government quickly wants to get out of this program and actually roll out its own policies aimed at stabilizing the economy and do away with those IMF restrictions. For some, any attempts to send signals to donors and investor community that it is not committed to pursuing the program might not be good for the economy.
Meanwhile, Country Director of the World Bank, Henry Kerali, does not think that Ghana's program is really under threat. He explains to Joy Business how government can get around the situation.
We believe that it's in the right direction. Obviously, it's going to take time. On the issue of revenues, it is the responsibility of Ghanaians to pay their taxes, and this is what the Minister of Finance made. It's also the responsibility of companies, whether they are nationals or internationals, to also pay their taxes to the exchequer. So it is the responsibility of the nation as a whole. And there's responsibility on the part of individuals to save more. So in terms of revenue, it is going to take time, but I believe the framework is there to be able to boost this. But on the broader picture of growth, we see growth this year 6 to 7%, next year 7 to 8%. Subject, of course, as always, to no further shocks of any kind. So the growth trajectory is positive. The outlook overall is positive. This year, 2017, we believe will be, as I say, 6 to 7% compared to 3.5% in 2016.
You talked about the program being, or policies that they've outlined being in line with the IMF program and all the rest, and the program is forecasting a budget deficit of 3.8 for this next year. Government is looking at 4.5. Obviously, there are some serious implications there for the fund program.
There are implications, but there are always ways to make adjustments. If your revenues are down, you can always seek to make adjustments to your expenditures in order to maintain a balance. I will leave the discussion between what the final outcome target should be, whether it's 3.8% deficit or 4.5% deficit at the end of 2018. That's a discussion between the IMF and the government. But as far as the World Bank is concerned, we focus more on the growth, and the growth looks positive. We also focus on the debt levels. We are supporting government with its management of the debt stock. We've seen action to reduce the debt in the, to reprofile, I should say, the debt in the energy sector. All of these are actions that we support.
Let's now stay further with the financial statement of government, and government says plans captured in the 2018 budget is evident that Ghana is on course to weaning itself off the IMF program next year. Opening the debate on the budget statement, Planning Minister Professor Jan Bafour said the NPP will implement workable homegrown policies far better than that implemented by the previous administration. Meanwhile, the minority, who say the budget statement is empty, is demanding that government withdraws the 2018 budget statement delivered to the House last week. The minority says the finance minister earlier this year revised revenue targets without parliamentary approval and went ahead to include those figures in this year's budget statement. Finance Minister Ken Ofori-Atta presented the budget themed putting Ghana back to work to Parliament last week. He is seeking approval from Parliament to spend some 61 billion cedis. We're trying to get in touch with our parliamentary correspondent, Joseph Opoku Gakpo, to bring us some live feed from Parliament where the debate is currently going on. But before we get through to him, let's now have some highlights on the budgets. those were some highlights of the tax reforms as captured in the 2018 budget statement. Away from that, the ICT sector holds great potential in transforming the economy and growth of the private sector. That's according to a new World Bank report, diagnostic report released in Accra, which noted that developments in the private sector showed the ICT can be used to deal with most of the challenges facing the private sector and help private firms play a lead role in transforming the economy. Sheikh Umar Saidi is Regional Director of the IFC for Africa.
Well, to make this report relevant, all the key stakeholders that have been identified will be playing their role. We've seen government really look at this report. They've given us their feedback. They've been very, very engaged with us. So on their part, it's about very specific reforms that have been identified in the different sectors that we've looked at. And then they will work with all the relevant parties to make those happen. Obviously, they will have to look at each and every one of them to make sure that they're also relevant in terms of what they are planning to do. So that's one key stakeholder. The other key stakeholder would be the private sector. So if you have de-risking that happens in a given sector that makes it possible for you to sustain your operations and the opportunity comes your way, I guess we'll expect that you will take advantage of those opportunities, looking at not only your skills base but also your capital and everything that you can put on the table to go and nurture those opportunities. And then you have other participants or stakeholders such as us, the World Bank Group, IFC and the World Bank. And of course, you have our sister institution, MIGA, as well, that as those opportunities create possibilities to fulfill our development role through financing, through advice, through all the means that we typically use to be involved in our client countries. And obviously, Ghana is a very important client country. We will play that role, but not just us also, but you also have the other development partners that are around that also are focused in Ghana.
Time now to go to the stock market to take a look at some developments there. And financial equities listed on the Ghana Stock Exchange have begun releasing their financial performance for the past 9 months of trading on the Bears. Standard Chartered Bank and Car Group, some equities which have been vibrant within the year. The Ghana Stock Exchange requires all listed equities to make public their financial positions for the past 9 months of trading every year. Let's get some further analysis on this particular development so far. And we've been joined live by Bertha Atubiga from the Gold Coast Fund Management, who is going to analyze the situation as it is. And Bertha, good afternoon. Welcome to Marketplace. All right, now, so Bertha, tell me, what exactly is happening to the financial equities which have listed so far?
Okay, thank you very much. And like you mentioned, it is compulsory that all listed equities on the Ghana Stock Exchange release their financials. That's how the company is performing by the end of every quarter. And as at the end of September this year, we've seen most of them release their financials, and it's actually informing us as analysts what is happening with the company, and it's also going to assist investors who actually consider the financials of every company as a key indicator in determining or making a decision as to whether he or she should invest in that particular equity. And today I have some equities with me here, some financials of some listed equities on the stock market. And we'll be looking at Standard Chartered Bank, GWEL, BOPP, ADB, which was listed last year on the market. And then also look at CAR. Now, I'm going to start with StanChart, it's going to be very brief on StanChart. Now, StanChart last year increased their profit, that's the total comprehensive income this year, September 30th, increased their comprehensive income by 24.29%. And if you look at their total assets, also went up by 21.64%. Now, looking at Standchart's performance, comparing it to last year, it means that there's been an improvement. But if you look at their non-performing loans, that is loans that they were not able to get back, 2016 NPL was around 48.9%, and this year they were able to reduce it to 44.9%. And these are very good indicators for any investor that wants to invest in Standard Chartered Bank. And if you look at the price of the equity currently on the stock market, is doing very, very well and has added significantly to investors' capital.
Now, Betha, before you go on, let's look at...
One thing that we should also take note of is...
Yes, I want to find out the same situation which persisted exactly last year within the same period. I mean, the performance of these equities that you have mentioned, SCB and Cowbank, did they also do well as they're performing currently on the market?
Yes, these equities I'm talking about did very well comparing it to last year's same period. That's for the first 9 months of the year. And even I'll be talking about ADB. Well, let me be very brief on the others. I've talked about Standard Chartered Bank. Let me talk about GOL. GOL also made a profit of 11.08% comparing it to last year's same period. BOPP, which is also a non-bank financial equity listed on the market, went up marginally. Well, it was very marginal, 0.95%. But what is actually influencing BOPP's performance now is investor interest or confidence, or let's say sentiment. The equity is doing so well, and investors are following the trend. The stock market is doing so well, and it's actually the highest returning equity on the stock market. Now, back to the financial equities. ADB. We know ADB was listed recently on the stock market, and tell you, Ima, ADB is returning more than 4,000%. And this should tell you that these banks are improving when you look at their financials. Some of them, not all per se, but most of them are improving. ADB went up by more than 4,000% on its total income for the first 9 months of this year, comparing it to last year. Now, last year, by end of September, ADB made a loss of 1 million. It made a loss of about 1,016,000 Ghana cedis, and this year they were able to make a profit after tax of 47 million and above. So this should tell you that ADB has done significantly well. And one of the reasons, or one of the issues that actually impacted in ADB's profits is that their net interest income shot up significantly when you compare it last year and then this year. So that's one of the key things that attributed to the significant profits that we saw for ADB on the market. Now, you look at their NPLs for ADB from 35.23% last year, it increased to 38.79% last year, unlike Standchart that was able to reduce their NPL comparing it to last year. And if you look at the banking industry in general, the NPL rate went up to over about 20% in the first 9 months. That's as of the end of July. The NPL rate for the banking sector went up comparing it to last year. So we shouldn't be surprised if you see some of these banks actually recording high NPLs. And let's look at another equity.
Yes, could you quickly update us on the performance of the currencies this year so far, and compare it with last year, same period?
Okay, so thank you very much. As of last year, around this time, the cedi had lost about 3% or less to major trading partners on the interbank market. But as we speak right now, the cedi is recording a year-to-date depreciation of about 9.4%. And this should tell you that last year we had a cedi being relatively stable as compared to what we are seeing this year. when it comes to the forex or the interbank market or the performance of the cedi on this against these major trading partners on the interbank market. But going forward, we're expecting the cedi to be relatively stable, but with regards to the pound and the dollar, we could see some further declines. But with the pound and euro, but with the dollar, we are not expecting significant declines or depreciations against the cedi. Because if you look at the trend that we have,
so wrapping up, I just want to know what exactly inspires investors when they see these figures, because I know that some investors don't really also pay too much attention to these figures. But how does it impact, or how does it really affect investor confidence in the Ghana Stock Exchange?
Okay, if I heard you very well, you're talking about these figures, the financials that we have for these listed companies and its impact, how investors, why investors should consider these figures when investing in these equities on the stock market. If I got you right.
Sure. Yes.
Is that, yeah, okay. So one thing is that with the Ghana Stock Exchange, we know that it's gradually growing. Initially, information in other markets is very, very sensitive or makes significant impact with regards to investing in these equities. And now the Ghana Stock Exchange, we have seen this trend. Mostly when these financials are released, what happens is that it boosts investor confidence. And you, an investor out there, should be able to tell what is going to happen to the company you are investing in or you intend to invest in coming years, or looking at their current position. And most of the times the earnings per share of these financials or these companies can tell you what you should expect in future, looking at their trend, the past trends and the now. So these figures are very important, are very key when it comes to investing in these equities. Sometimes some companies will be making losses. And you don't have to invest in such companies. And a typical example is what happened with a company that was delisted. They were not making profits, and the long run, you, the investor, suffer. So it's very important that we pay attention to these figures and understand these companies, their financial positions, and what they are
Many
actually
thanks for your time,
to us.
Bertha Atubiga, for that update. And that was our market analyst, Bertha Atubiga of Gold Coast Fund Management, bringing us up to speed with developments on the stock market. And currently financial listed equities on the market are submitting or releasing their financial results for the past 9 months. And this is what we have been analyzing for now. Moving on, farmers are warning repayment of inputs supplied under the Planting for Food and Jobs program may be negatively affected if the Agric Minister's decision to accept only cash is not reviewed. Government earlier this year supplied inputs to the farmers, who are expected to repay 50% of the cost either in cash or with their produce at the end of the farming season. But a letter from the Minister's office again to various MMDAs is now directing for acceptance of only cash. Programs coordinator of the Peasant Farmers Association, Charles Nyaba, says the move amounts to breach of contracts. We have him on the line now to clarify this position. Thank you very much for joining us, Charles. Now, what exactly is your beef?
Thank you, and good afternoon to the listeners. You know, we are very clear in our position. We have agreed, we stood by the agreement that we had with the ministry, that they receive these inputs and they will make repayments either in cash or in kind after harvest. And that's what we told our members, and the leaders have started collating the repayment, waiting for MOFA to offtake.
Now, did you have any reason, any explanation to this current directive?
No, even we've not had any communication from the ministry yet. We only chanced that directive from the minister, and then we also got information from some districts that they were informed by their directors that they will no more receive kind payment.
Now, why would it be so difficult for your members to abide by this particular development?
No, for our members, we don't have problem in repaying, because the Planting for Food and Jobs has been good for us.
Okay.
At least there's a reduction in the prices. But the point has to do with whether there's available market. That's the issue. There's no market. So we thought that this was one way of government helping us to postpone payment and pay in kind. And
All
it
right.
was clearly stated at the beginning. So we're expecting that at least government abide by that, and then we'll pay in kind.
All right, Mr. Nyaba, we'll come your way again on this particular issue on Business Live this evening, because we have more to explore on this. Thank you very much for your time. And that was Charles Nyaba, Programs Director of the Peasant Farmers Association of Ghana. And on his voice, we end this particular edition of The Marketplace. My name is Emmanuel Abuaji. You have to thank so much for your company. Have a good afternoon.